Good morning, everyone. Once again, this is Black Forex coming to you with another Forex video to explain the certain fundamental aspect, certain to explain certain fundamental aspects that's going to be affecting the Forex market for the upcoming trading weeks to come. So, a couple things that we want to break down, as so everybody has a good, clear understanding, is about interest rates and how increasing and decreases interest rates can affect an economy. Okay. So, without further ado, let's go ahead and get started. Okay, so let's go ahead and get I believe it was, what day was that? Let's find the interest rate. Wasn't that early. Let's find the interest rate. Just give me one moment. I'm trying to find the USD interest rate. Here we go. All right, so as we can see that the USD interest rate, the Federal Reserve raised the interest rate from 25% to 50%. That was the first time it has done that in about 3 to 4 years. Now, the reason why that is that you have to understand the relationship between interest rate and inflation. Okay. Now, when interest rates are low, people have more money to spend because you can borrow money from banks a lot more cheaply, which in turns causes the economy to grow because since people are spending more money, businesses and different other entities will start to increase their prices. And also being able to get business loans and get loans from the banks and different borrowers, and it lets you be able to increase higher employment because you can start to grow your business a lot more. Okay. So we have with lower interest rates, right? We have the ability to be able to grow business because you have the ability to be able to borrow money a lot more cheaply. And you also have the increase in prices as well for consumer goods, which allows you to have more profit if you are a business. Okay. And it allows people to actually have more spending money. So people are spending more money, businesses are making more money. They're increasing more. They're increasing more in profits, and they're able to borrow money a lot cheaply from banks, which allows them to have a higher employment and be able to hire a lot more people. Okay. Now, when you increase an interest rate, it has the inverse opposite effect. People start saving money because the interest rates to borrow money from banks and different borrowers have increased significantly. Okay. This causes a decline in economic growth because prices on consumer goods starts to fall down. And this also leads to higher unemployment because you have less profits available, right? To be able to hire employees, and it's harder for businesses to be able to borrow money from banks and different borrowers at a good, reasonable interest rate. So they cannot hire as many employees as they would like. Okay. So now that we explain that, let's explain how does this affects our economy and the reason why it was done. So to combat inflation, one of the things you can do is increase the interest rate, which will drive prices down. Okay, because people are not spending so much more, so the direct effect is that prices will start to go down to entice people to start spending more. Okay, so as we can see, America had also increased its interest rate. If we go down some, we can also see that Japan also kept its interest rate the same. We'll talk about that also. And let's get to Let's see. And I know Great Britain, the British pound had also increased its interest rate. So let's get to that. Just give me one moment to find it. Oh, here we go. Now, as we can see, Great Britain has also increased its interest rate from 50% to 75%. And Japan roughly left theirs about the same. So we could see initial bumps up in strength in the USD due to this increased interest rate. And we also may see an increased bump up in strength in the Great British Pound currency due to this increase in interest rates because markets are going to start reacting for that. Now, the JPY, we're going to have to kind of wait and see how that holds out because they kept their interest rate exactly the same. So they're seeming like they're not trying to increase it to help combat the inflation. So they may have other economic policies in place that can help stimulate their economy. So we're going to have to wait and see how that plays out. Okay. But as we can see, Great Britain did increase theirs by 25%. And as did America, it increased theirs by 25%. But see, here is the kicker about increasing the interest rates in times like this and prices being so high and oil prices being so high, okay? One of the effects of increasing interest rates is that decreases the amount of jobs that are available in the economy. And with these prices being so high, it's going to take some time before these prices to come down. So even if you're considered middle class, making between 40 to $60,000 a year, you're probably trying to look for like a second job to be able to, be able to still be able to keep up your lifestyle or be able to, take care of yourself or your family. If there's no jobs available for people, then that's going to also further increase the inflation. Because if people don't have money to spend, have money to spend, a little bit of money they do have, they're going to save it more and more and more. And if people are not spending money, because a growth of economy is not judged on or is not pushed by people spending money on necessities. And what I mean by necessities is like food, hygienical supplies, cleaning supplies, the necessities that you need to live, the needs. Your economy does not grow based off your needs. Your economy grows based on people spending money on their wants. New Jordans, new phones, new digital watches, new computers, new clothing. Okay, that's what stimulates an economy. And if people are not spending money on those wants and they're saving money so they can have money for their needs, it's just going to further cause stagnation in the economy and further cause increase in prices because businesses have to make up that difference of the lack of profit that's not coming in from people not spending the money on these goods. Okay. And secondly, right? Inflation can still further continue based upon the gas prices because we still do not have anything in place to fix gas. Even though the oil has been dropping down over the last 2 weeks, we're still maintaining above $100 a barrel, which is very, very, very expensive. Okay, so until gas actually prices start to come down, that will actually help that will actually help decrease inflation more than anything else. Because as long as gas prices are still high, right? People going because gas is a necessity. If you drive a car and you get your car for your family to go to and fro from work, to and fro from school, to and fro from the store, and to run your errands, you need gas to be able to do that. So gas is a need, it's a necessity. Okay. So what's going to happen if the gas prices keep going up? People are going to keep saving money, otherwise money that they would spend on their wants, so they can make sure they can have the things that they need. Okay. And then also businesses are going to have to pay higher prices to ship goods back and forth between their factories to the consumer to the stores. It's going to cost them higher. It's going to cost them higher prices to be able to ship these goods back and forth. Okay. And with these higher prices, the businesses are not going to try to eat as much as the higher price. They're going to put that difference of the higher price on the consumer, which is also going to further increase prices on consumer goods. Okay. So we're going to have to wait to see how this is truly going to affect the strength of the USD and the overall market overall because it can probably show the USD can probably show short-term strength for about a few trading weeks before the inherited weakness starts to kick back in because we're not actually fixing the exact problems of what's causing the inflation. Okay, because what's really causing and catalyzed the inflation was once we started to have increased oil prices. Okay, and that's just not an American problem. That's for anybody right now. If you live in a, in a technically advanced first world nation in which people have need gas to be able to ship goods back and forth. Same thing for Great Britain. They increased theirs from 50 to 75, so it's the same thing. As long as the gas prices remain high, it is going to cause further inflation. As long as people are saving money for their needs, it's going to cause further inflation. If there are no extra jobs available for people to have extra money to spend, it's going to cause further inflation, and we could start by the summertime really looking like we're going to be in a global recession towards by the midpoint to end of the summer, going into the fall and winter season. Okay, because this is basically, it's almost like a recipe for disaster. If they, I'm not an economist, but in my personal opinion, I believe that they should have did put economic policies in place that bring the gas prices down first, and then increase the interest rate, so that the inverse effect of increasing the interest rate, which would the inverse effect of increasing the interest rate won't hit the economy too heavy with decreasing the jobs or people saving money. Because if you bring the gas prices down, people will have more money to spend. They can bring the prices down, which means they can have increased profits, even though the inverse of increasing the interest rate is higher unemployment. If the gas prices come down and the companies have more profits and they have more ability to hire, which means people can start to get extra jobs and have more money to spend. Okay, so we're going to have to see how these things play out in the next several trading weeks, but there may be an initial strength in the USD and the Great British Pound for about 2 to 3 weeks before we start to see a weakness kick in again. Now, between that time, I'm hoping, because I live here in America and I'm an American citizen, I'm hoping that they start to institute economic policies that will help combat these high gas prices, but that doesn't seem too likely. It's almost like, okay, they've done kicked their feet up, we've done increased the interest rate. Now let's see how things play out. And they don't look like they're having a lot of foresight in what's going to start to happen once the summertime hit. And basically, it's economics 101. More gas and oil gets spent in the summertime than you do in the winter and the fall, because people are all out and about. But if that does not happen, we're definitely going to be looking like we're going into a recession. Okay. Now, I hope that information is helpful for you guys and going to help improve your knowledge of fundamentals going into these next couple of trading weeks. Okay. Happy trading.